Hi, this is Jake from Nominal. Multi-entity accounting can often feel like juggling too many balls in the air. For every finance professional, the goal is clear: achieve a seamless, efficient process where everything flows without a hitch. So, how does Nominal make this a reality? Let's walk through it. One of the biggest challenges in managing multiple entities is the varying chart of accounts across subsidiaries, especially when they originate from different accounting platforms. Our AI-driven solution seamlessly normalizes accounts from every subsidiary, regardless of platform, into a unified chart of accounts. This ensures consistent, accurate and streamlined reporting across all entities. Now, let's talk about cross-entity eliminations. With Nominal, we've automated the entire elimination process. Once a pair of intercompany clearing accounts is selected, Nominal streamlines the process. It automatically eliminates intercompany transactions at the end of each period. As the period closes, providing a clear financial snapshot to stakeholders is essential. Often, specific off-the-books entries are necessary to show a complete and accurate picture. Nominal's adjustment journal is designed to deliver this clarity by seamlessly handling accruals, deferrals, and other financial nuances. Advanced multi-entity reporting. With Nominal, reporting becomes an asset instead of a chore. Generate solo and consolidated financial reports in real time. Dive deep into the nuances of each subsidiary's financial footprint, making inter-entity comparisons intuitive. And dimensional data analysis offers a deeper layer of understanding of multifaceted business elements. You can also effortlessly compare financials across different periods, enabling clear insights into your business's trajectory and performance trends. This is just the tip of the iceberg. Join the finance frontrunners choosing Nominal.